Good morning. I'm a little giddy because Michael Batnick just told me that he was giddy yesterday. We are living through unprecedented times, and that's why it's time for an all-new round of What Are Your Thoughts? Michael's here, Duncan's in the house, got viewer topics, so much good stuff going on. I'm going to try to compose myself and stop laughing. Stick around. Okay, am I going first, as usual?
Yeah, change
By
it
the
up
way,
a bit. Why don't let's have you go first.
Yeah, just for a change of pace?
Yeah.
All right. You've been talking about this a lot, the Tesla echo bubble. Like all of the mini bubbles that have come along, probably influenced by what Tesla's been able to do. And just in a nutshell.
It's not just Tesla.
Not just Tesla, but just in a nutshell, the basic idea is make outrageous promises about whatever you're working on, like electric vehicles, solar, whatever. Big stock price, sell more stock, get more people excited. Like eventually you can fake it till you make it. And the investor class is giving you all of the ammunition that you need. So James McIntosh wrote about.
Hang on. I think that's what you just described as a one-off to Tesla. There's really nobody else doing that.
I totally disagree.
Okay.
Every EV company is actively in the process of doing the Tesla playbook, and it's working. And the reason it's working is because the public wants it to work.
Maybe Elon's created a halo around this space, but it's not working in other places, is it? Where else is that happening?
I think it's happening
where leaders are just being outlandish. I don't think it's happening.
SPACs, IPOs. I guess you can't pull this shit if the public's not in on it. The public's in on it. They're credulous. You know that term, credulous? Everybody wants this to work. There's not enough of an opposing force on the other side. There are no sellers. So look at this thing, QuantumScape. So this thing already is cut in half, but it started off by tripling in value to $25 billion. This is an EV-related stock. Volkswagen's got a piece of it. It's got a great story. They've got these solid-state batteries. Everybody was excited about it. It already blew up. I don't know what happens from here, but these types of situations have arisen as echo bubbles to Tesla, and there's probably 100 of them. It's not like there's 3 of them.
So get to James McIntosh's story. He wrote a piece called "If It Looks Like a Bubble and Swims Like a Bubble."
I think he's right. Like, it's not that these are all fake companies or that they're all going to go to zero, but they're all bubbles.
So
they're mini bubbles.
There was one in here that really stood out. So these are the 5 bullet points he wrote. Exponential growth in the price of story stocks, check. A flood of early stage IPOs tapping into the popular themes,
check.
Quadruple check. New investors who don't know what they are doing. Some do, but yeah, obviously there's a lot.
Almost none.
Early investors who rode the stocks up selling out. The guy from Lemonade is dumping. And right. This was the one I hadn't considered that I thought, good point. Old economy stocks soaring as they tap into the popular theme, General Motors and Ford. That was a good observation.
Yeah. So we've seen this, like multiple versions of this. We saw, we saw smaller versions. This is the biggest version in a long time. Like, we're talking about every company is worth $10 billion just for clearing their throat and announcing themselves. And that obviously can't continue forever. But I do think that in the absence of Tesla, none of this would have been able to happen. They're all following that same playbook.
Yeah, that Tesla was a spark, no doubt. All right. I want to talk about some of these numbers. Look at this chart, this table of quarterly revenue growth year over year.
Yeah.
I was looking at this.
You'll never see this again as long as you live.
So Norwegian Cruise down 99%. Carnival down 99%. Live Nation down 95%. Madison Square Garden down 91%. Las Vegas Sands down 82%. Would these companies be bankrupt if it were not for a fiscal monetary stimulus and low interest rates, like being able to tap the debt market?
Let me stop you. Every one of these companies was rescued by Saudi Arabians. Like, sovereign wealth funds in the Middle East came riding to the rescue for every one of those names that you just, maybe not Madison Square Garden, but there was hedge fund money and sovereign wealth money and private equity money waiting for an opportunity like this. And to their credit, these are people that They say we're going to be greedy when others are fearful. We're going to, we're going to have dry powder. They did. Like they really did. They recapitalized all these stocks. And I think that's one of the most frustrating things about last year for the bears and for short sellers.
There was no time.
They got rescued before they could even lose any money. Yep. Like it's not like they had 2 bad quarters and begged a sheikh to come in, with a $10 billion check. The money was there in April.
Imagine you're a distressed fixed income guy and you're raising a fund before you could even have the documents signed. These things were ripping.
Right. And so if there's a double dip, are you going to tell me you don't think there's enough liquidity in the world to come in and give them even more? I wouldn't make that bet. If Carnival makes it through this, who can't? Right? Like think about that. If a cruise line makes it through this, who can't survive in terms of like large corporations, publicly traded corporations? So that's what happened. And these numbers are cartoonish and they're going to look really funny like even 5 years from now when you look at like a chart of revenue growth for certain stocks or sectors where these lines literally drop down to zero. I don't know how fast the recovery will be, but they won't stay at zero. I want to talk about IPOs because I think the IPO market is completely smoking crack. And I mean that like in a nice way, meaning some of these companies that are raising capital and coming to market are going to be big home runs over the years for investors. I don't hate the companies. I think the atmosphere is extremely punchable and I want to punch everybody. And every day I want to punch people even more. But I won't have to because we talked about supply being the thing that eventually puts an end to this. I think I'm going to go out on a limb. We're in the 8th inning. I'm not going to put a time limit on this, but I think you're about to start seeing companies come public and drop in their first day. And I think especially you're about to start seeing SPAC deals get busted out.
I agree. Howard Lindzen is launching a SPAC. I agree.
I hope his is a massive success. By the way, the last one.
I think $300 million they're looking to raise. So good luck.
Why not?
Good luck to everybody involved.
600, 800. Who gives a shit?
This might be the 8th inning, but there might be like 32 runs scored. It might be the longest inning of all time.
Okay, let me read you this. This is from Bill Smith from Renaissance Capital. They are the experts in all things IPOs, including SPACs. Last year, bankers and market observers called the top. Surely we had reached peak SPAC. Apparently not. So 67 new deals in the first 3 weeks of January, which is totally normal, makes a lot of sense. That's a record number of SPACs by 34%. So that's a third more than we've ever seen in 1 month. And he notes that SPAC names have referenced Batman, the Avengers, and a popular Netflix show. I can't even keep up.
Queen's Gambit.
Great. There's a SPAC that picked the ticker symbol LMAO. That's going to come back to haunt them in the class action suit.
Oh, boy.
And then just regular IPOs are hitting records too. This will be the busiest January for IPOs in 30 years. Highlights from last week. There's a Chinese vaping brand, RLX, that popped 150% on its first day. That's the highest pop ever for a $1 billion IPO.
I forgot to tell you, I put $10,000 into that one.
Chinese vaping, is that a slot in your asset allocation? At the end of the day, there are now 3 SPAC ETFs, all garbage. And we're probably on the verge of starting to see some de-SPAC blow-ups that are fairly large and notable. So what's your take on that?
Well, this meshes nicely with my next topic, which was supply.
Okay.
So it's not just IPOs, but let's just stick with that for a minute. Last year, companies raised $167 billion. This is according to the Wall Street Journal from Dealogic. $167 billion through 454 offerings, surpassing the previous record in 1999. SPACs raised $82 billion in 2020.
That's half.
A more than 6-fold increase. And I think SPACs are now, in the recent quote, I think they're up to 70% of all new money. So they're...
Yeah.
So, all right. So we got the SPACs and we've also got secondaries coming.
Yes. The opposite of buybacks. Does the anti-buyback crowd hate secondaries even more?
Oh,
or
yeah.
they like secondaries?
U.S. listed companies have conducted 80 follow-on stock offerings this year, raising $16 billion. Both are records for this point in the year. going back to 1995. So this is your point, is that it took Wall Street a little while to, get the plumbing, to lay the tracks, and now it is a tidal wave of supply.
Yeah, and it's investors are Lucille Ball, Lucy and Ethel on the conveyor belt. The chocolates are coming down the line, and they're stuffing them in their cheeks, under their hat, in their bra.
You have
That's where we are.
Do you have an analogy that works for people under 65 years old?
I feel like that's pretty. I feel like that's pretty accessible for everyone. It's a meme. It's not like I wasn't alive for that show either. All right, I think we've made this point on the show before. Everyone's like, "How does this end? What's going to happen?" It's not an event. Just all of a sudden, everyone's had enough. Everyone's been stuffed with enough shit. We're going to get there very soon, I think, at the pace we're at, because it's a record-breaking pace. That old market saying, when the ducks are quacking, feed them. The ducks are their livers are now foie gras. We have fed them. And all right, does that work for you?
Yeah, there you go. I've got
Punk?
this.
Does that work? Is that better?
All right, take it easy. This is anecdotal. I've got no evidence, but it is interesting how everybody has gone from, and it's not everybody, in like 2017, 18, 19, 20, this is insane. This can't go on for much longer. And then all of a sudden, you got the same people saying, "This."
I'm going to do a SPAC.
No, don't be surprised. Don't be surprised if this is just getting started. Like, we fought it, and it feels like everybody has accepted it.
You know who just launched the third and hopefully final SPAC ETF?
Paul Ryan.
Just please take a guess. Mark Yusko. And I love Mark Yusko, but Mark Yusko 2 years ago was on TV telling me and Scott Wapner, epic crash and depression. That's now launching SPAC ETFs. So I think you're seeing a lot of people who were in that camp of this can't go on. They've not only succumbed, but now they're going to start leading the parade down Wall Street. Would you rule out a gunlock SPAC? I wouldn't. Like, shout to Jeff, but that train's never late, right? So I think that's the next phase.
Wake me when Harry Dent launches a SPAC. Then I'll start to get nervous.
SPAC, David Rosenberg SPAC, right?
Stockman.
The David Stockman SPAC would be pretty interesting. He's going to short a business that's not yet public.
A Rosenberg SPAC. That would get my attention.
I'm just saying, like, we're kind of there, and no disrespect. This shit is crazy, and I got a lot to say on this, but I want to hear your take. We haven't really even spoken about this. The hedge fund that got so beaten up by Reddit that they had to get bailed out by two other hedge funds. So this is Melvin Capital, which is like a $12 billion fund, scorching hot track record, like average annual returns of 30% or something. They're in the wrong shorts, and Wall Street Bets and other message boards decided to beat them up with call options, and that's what's going on with GameStop, and I guess a whole bunch of other stocks that some of them I've never even heard of. And then Citadel and Steve Cohen had to ride to the rescue, and I think they were already invested.
So
in the fund.
I just have two things to say, and then I'll get out of the way because I already did my take with Ben yesterday. But truth is stranger than fiction. Imagine writing a year ago that a message board was going to take down a prominent Wall Street firm. I mean, you can't make this stuff up. And this was the part of it that I thought was interesting. And Ben was all over this, that these people are getting smarter. And if you look at some of the message boards, is the language foul and insane and the behavior insane? Yes. Is the logic there? This was a coordinated attack. This was not an accident. And the part of it that I thought was interesting, I didn't know this. Here's from, I forget which article this is from, maybe RIA Intel or Institutional Investor. The Reddit users were able to discover Melvin's Capital short against GameStop because it was expressed in listed put options. Unlike most short positions in the US, those bets must be disclosed in filings with the SEC. I didn't know that.
A couple things. The message boards have long been a source of market volatility, and like in the late 1990s, iOmega was the first message board mega short squeeze out of control stock rally purely based on message boards and anonymous nobodies posting. And that is like 97 or 98. And that's like my first awareness of this stuff. And I wasn't even in the business yet. I was just casually following the stock market. But that's 25 years ago. So this has been going on for a long time. I was reading on some of the Reddit boards. One guy's like, "May those billions become your billions, fellas." Like in response to that article about the hedge fund that got bailed out.
Robin Hood.
Yeah. Another guy
Right?
goes, "We made our own trickle down economy." That's like the Bane speech from the football stadium. It's like,
Gotham is yours.
you know?
No one will stop you.
So there's some crazy shit going on. One guy says someone could buy a bunch of GameStop gift cards to boost sales and then sell them on eBay to fuel the secondary in-store purchases. Like, this is a whole nother level. I don't know that we have sufficient regulatory controls around this kind of thing, but I do believe investigations are about to commence. And I would not be surprised if there are some charges, because if this is being coordinated and there are electronic communications between traders, like, that's going to be a problem. So I just hope if you're a young person posting on these message boards and you're new to trading, you realize that like market manipulation is illegal. And if there are records of you orchestrating this stuff, like, the Tendy man is not coming. The feds are coming. And it's not going to be fun, even if you're 25 years old. And I shared an article with you yesterday, Mike, about the 15-year-old who got busted for manipulating a stock on Yahoo. And that's already, I don't know, how long ago? Is that 20 years ago, 15 years ago? So like, none of this is new or novel, and they will come after people if they think that this is highly coordinated, which I guess it appears to be. So that's my PSA. I hope whoever needed to hear that heard it. We got anything else on this, or
Yeah, we do.
alone?
Yeah, no,
Okay.
no, I'm good there. I couldn't look away yesterday. I mean, that was one of the most exciting days in the market in my entire.
GameStop? What, in GameStop?
Yeah.
I check the price every 5 minutes.
And not just GameStop. Like, I have a 3-minute chart up. GameStop and AMC and all the others. All right, I want to talk to you about what's going on with NBA Top Shot. So I think we were speaking about this collectibles bullshit that as you referred to. This jives with my theory of massive gains trickling down into other areas. This is on the blockchain. So these are crypto people. So these are people that have made so much money in crypto and YOLO trades and whatever, and now they're on to the next thing. And so big money is causing these micro bubbles everywhere. It's reflexive, right? You with me on that?
It's also the nature of the people who have made the big money. This is the type of thing that they would be into.
Correct. All right. So what the hell is NBA Top Shot? Tommy Beer did a post explaining this at Forbes, and
It's inexplicable.
your brain's going to explode. So trading cards have come back into vogue. A Mickey Mantle rookie card sold for like $5 million recently. So it's exploding, and cards on the blockchain, I guess, are the next evolution. So here we go. By the way, NBA is involved in this, which is brilliant. NBA Top Shots, which are the video versions of highlight moments, are sold in limited edition packs and sold only for a limited time. So the packs go between $9 and $230. I tried to buy a pack this morning. I want to get involved and see what the hell is going on. They're sold out. Okay.
Pack of what? Of video clips?
A pack of video clips. They're sold out.
It's video clips of like Kobe Bryant slam dunking a basketball, and you can own the clip.
It's
to
live.
Do what with?
Trade it. So after packs sell out, the only way to acquire NBA Top Shots is on the peer-to-peer marketplace, and the volume is exploding. Once purchased, those highlights go into a buyer's encrypted, secured highlight wallet. And this is the part where your head's going to explode. Josh, look at me.
Why does anyone need this?
Look at me.
All right, go. I'm looking at you.
Each
I can't take
individual,
my eyes off you.
Each individual NBA Top Shot video card has value due to its authenticity and scarcity being secured by a blockchain called Flow.
What the f***? What? Yo, I DM'd Jason Concepcion, and I was like, from The Ringer.
Yep.
And I was like, what the hell is this now? And he's like, I can't make fun of it. One of my friends is an early investor.
Dude, you don't want to short these networks. Like,
I'm not shorting it.
There are non-financial considerations involved. It's a community. It's fun, and it's working. These things are skyrocketing. You can't get, the packs are sold out. For example, the Zion Williamson block where he jumped and booted into the stands. That's a limit. I think that's limited supply. There's only like, say, under 10 of them or so. This is going for $65,000 right now. So if you buy this,
I don't understand. But what no one is explaining, or I'm an idiot. They are explaining, and I'm not understanding. Is that the only video clip that exists?
No, you could go on YouTube. You could go on YouTube.
That's my point.
But
so what do you own?
The video is besides the point. Honestly,
That's the thing.
No, it's not. Nobody's watching their videos, dude. When you were collecting baseball cards, you're not like staring at the cards all day. It's besides the point.
What do you own?
It has value because people say it has value.
How about go get a girlfriend?
You sound like an old.
Whatever happened to like meet a nice girl, take her out to dinner,
You can
and
do
like,
both.
Dude, stop with this stuff.
This is
interest
not
rates. Interest rates at 2% blow all of this up. I'm sorry.
No, I disagree.
That.
I disagree, dude. Nobody is buying this. Nobody's saying, "Damn, I wish I could get 2% of Marcus." Oh well, I'm going to buy digital baseball cards. Nobody's doing that.
Let me ask you a question.
This is not an interest rate story. It's a crypto story.
Let me ask you a question. Your brother wins the lottery, wins $3 million. He has the chance to buy a building in Manhattan or put $3 million into video clips of Zion Williamson on the blockchain. You would punch him in the face if he told you he was doing that.
Yeah, of course I would. Nobody's putting all of their money into this. And dude, these are crypto people that have made an insane amount of money.
I guess, you know what? That's probably the part that I'm missing.
That's the point.
That's probably the part that I'm missing.
So
but still,
I don't think
even if you made...
You could call this a bubble. I don't think it's going away, and I think it's only getting started.
Do you remember crypto kitties? That wasn't that long ago. You think those are still worth anything? I bet you they're not. Crypto still is, not crypto kitties.
Dude, this isn't going away.
Did anyone ever tell you about Beanie Babies? Probably from before you were born?
Dude, I was 10. What are you talking about?
You were around for that shit?
When was that?
I don't know, but there were people mocking Beanie Babies, and the people mocking it turned out to be right. I'm just saying, not every one of these things persists into the future. I'm just saying.
Well, how about this? I'm not saying that this is going to be like $1 trillion marketplace in 20 years.
Oh, you're not? You sure? You could say that.
But 1, 2, 3 years, this is not going away. You're on the wrong side of this.
In 3 years, this is still around. This is still a thing?
Yeah.
Okay. I'll happily tell you that I was wrong, but I still won't feel bad for missing it. Did I have anything? Is there anything I could even top that with? Probably not, right? I don't think so.
I mean, but don't get me wrong. I'm laughing. Like, these cards have scarcity. Okay.
It's not a card. It's a clip. It's a video clip. Other people watch the game.
I think at one point I read like non-fungible token and my brain almost melted.
Non-fungible token, meaning you can only use it on the network, on the NBA top network.
Whatever.
All right. When are we including these in our asset allocation models? Is that a second quarter story?
I tried to buy a pack this morning. Sold out.
All right. Duncan, are we going to viewer topics?
Yeah, I think so. So Josh Kelly writes, Josh has often discussed the fact that the true value of tech-heavy growth companies is not properly captured on their financial statements. As time goes on, financial statements have seemed to become a less and less utilized source of information for investors, especially for high-growth companies. As a CPA, I can't help but think, do the GAAP accounting rules need a complete overhaul, particularly in the area of valuing and recording intangibles on the balance sheet?
That's a great question.
Josh, as a CPA, what do you say?
Yeah, no, that's a great question. Oswath Damodaran is who you should go to for that, not me. And he has written a ton on this topic because he is basically the dean of valuation and looking at accounting and then helping his students who will presumably graduate and go on to become investors, helping them understand what valuations are capturing and what they aren't. So I don't want to give like a half-assed 10-second answer to that. I would highly recommend. Right, Mike, do you agree with that? Read Damodaran on that stuff. So he's an NYU professor, and he's written probably 50 things that are a really good take. But I don't know if it's the GAAP accounting rules need to change.
And Mobison. Read Mobison. He's done a lot on this too.
Mobison's written on that too. I think what needs to change maybe is people's lens through which they view the process of investing. If it were as simple as looking at something like an 8K, looking at the numbers, comparing them to another company in the sector's numbers and thinking that you have an edge. That's probably the problem. I don't think it's the accounting rules themselves. All right, what else do we have?
Okay, this one's for you, Michael. Actually, I would be curious to hear Josh's response to this one as well. The question is, if you were 20 years old in this current market environment, how would you be making money and where would you be investing?
If I was 20 years old,
Short.
yeah, I'd be in Top Shot.
NBA packs.
No,
I knew it.
I would be all over this. If I was a young person, I'd be on the Reddit message boards. This is right up my wheelhouse. I love the action. I'm a gambler at heart. I would be all over this thing. If I was 20 years old, I would be going out of my mind. And I would probably be trying to explain to my friends why they should get involved and what they're missing.
Yeah, no, my answer is the same. I was 20 years old, and my parents turned over the bar mitzvah money, which was a huge mistake. Here's how hilarious the bar mitzvah money concept is.
But why is it? But honestly, what's wrong with blowing up as a 20-year-old? It's probably one of the best things that could happen to you.
Well, in the late 90s, like $25,000 was all the money in the world to a 19-year-old. That's one.
You should have diversified.
A 19-year-old with no education. So here's what's hilarious. You have all this money when you're 13. Your parents take it from you. They take all these checks.
Put it into bonds.
Put it into bonds. The bonds turn like 18,000 into 25,000 over
back in the day
6 years, which not bad, not great. And then you take that 25,000, turn it into zero with a fucking margin account in your first 6 months trading in eToys and Pets.com.
We never spoke about this. You blew up?
Like the whole thing, like negative balance, because I had a lot of really good guidance, no guidance. So that's probably what I'd be doing too, I guess. To your
by
point.
the way, we didn't get to this. The people that have made millions, and by the way, a lot of money was lost yesterday. I did a quick post. There was, what did I say? There was 2 million shares traded near the all-time high in GameStop. 90 minutes later, it was down 62%. So
nobody loses money. Bullshit.
We hear all the good stories, but there's people losing a lot of money really quickly. But the people that have gotten rich, I'm not convinced that they're going to give it all back. I think there's going to be a ton of winners.
You can't make generalizations. You're right, because lots of people will walk away. Lots of people already have. So,
you're saying that on the message board.
Yeah. So like you can't make generalizations. Oh, they're all gonna get wiped out. I don't think they're all gonna get wiped out.
Yeah, this is gonna end badly. I mean, yeah, for some people.
For some,
yeah, of course.
It's who's gonna end really badly? The people that are gonna take this up as a hobby, like a month from now at the end.
Yeah.
That's who it'll end badly for. All right, listen, we have one more thing we want to promote here, and this is gonna be the last one. We're gonna come back on Friday at 12 noon Eastern time. Michael, me, and Benjamin. And we're going to talk about the wealth-based game. Had a lot of fun. This is the final episode.
Oh, I'm blowing up my wealth-based account as we speak.
Yeah, what did you do?
Yesterday, dude, this is how nuts it was. I tried to short GameStop yesterday.
And
we couldn't get a borrow on a paper trading on a simulator.
You snooze, you lose.
I couldn't get any. So now
I got one at 9:30.
I was in all boomer stocks going into this last week. I'm like, you know what? That's it. I'm short Neo. I'm short Tesla, Bed Bath & Beyond, BlackBerry, and AMC, and I am blowing up right now in a bad way.
I went long AMC just because I think that's the next one they're going to do the GameStop thing too.
It's up 15% today, so I'm on the wrong side of that in my paper account.
Yeah. All right. But we're going to come back Friday and talk about it. We had a lot of fun trading with you guys, so make sure you come by. Thanks for watching. If you haven't told your friends about the show, this is a great time to do so. Make sure you like this video if you did, in fact, like it. If you didn't, don't feel bad. That's okay. You don't have to say anything. Ratings and reviews is very important to us, though, so please give us your positive feedback, and we will see you next Tuesday.